Dornbush download 154. Andrew and Michael, or Dowie as he's affectionately known here in the office. So Michael, what's doing? What's happening? What's going on? It's that time of year where we're just sort of looking at each other going, Michael, how are you going?
Yeah, absolutely, Andrew. No, I mean, of course, we've had the onslaught of reporting season, so we're sort of hitting a bit of a void now for a little while. Probably, coming up on the calendar that, investors will no doubt be keeping an eye on is, we've got a few straggler banks that have different reporting years, so they'll start to trickle out over the next few months. Or next couple of months rather. Bank of Queensland, I think from memory, is probably the first one, 12th of October.
We had Macquarie a couple of days ago.
Yeah, and not a bad update actually too from Macquarie. They had a nice little kick along, but
and reaffirmed their guidance, which is probably the big thing when you come to profit reporting season. Not so much your numbers that you've done. I mean, that's important. It's more what you think you're going to be doing into the future. Anyway, sorry,
yeah, absolutely. And, banks have copped a little bit of a touch-up too in the last few months, starting with, I guess, really the May budget and of course, the banking levy that took the wind out of the sails. Commonwealth Bank's been in the news for all the wrong reasons, but yet reported pretty good numbers.
And they seem to be turning. I see they're 76 just before, so hopefully they've bottomed.
Yeah, absolutely. Bendigo had some good figures as well. So all in all, looking like banks might actually report pretty well, but of course we'll see no doubt the dividend hunters looking at buying into stocks, particularly around that 45 days and that sort of stuff.
And you're spot on. Michael just touched on 45 days. So there's a strategy around this time of year for banks in particular, because they pay pretty strong dividends, to be buying banks sort of 6-8 weeks out before they announce their dividend, before they go ex-dividend, so you try and capture that. Have a chat to your Dornbush advisor whether that's applicable to you. But as a broader market thing, it does tend to push banks on because banks are 40-odd% of the index.
Yeah, absolutely.
And if 3 out of the 4 are about to announce their profit and pay a dividend, there is that sort of chase for yield on. The other thing, of course, Michael, is that volatility that we had in the market. Concerns about US debt ceiling, our chubby little friend up north, all that sort of thing. That seems to have abated a little bit as well. It hasn't gone away, sadly, but it's not in the news as much. So we've been lamenting for a number of weeks now, 17 for those playing at home, that we've been stuck in this trading band, 56 to 5,800, and I think we're about to break out of 5,800 this morning. So if that's the case, that is a positive for the market, and remembering that sort of August through October is historically the weaker months of the year, but equally so November and December tend to be stronger months for the year. So early days, but it seems to be setting up quite nicely coming into the end of calendar year 2017. Michael, apart from sort of staring at each other in the eyes, the other thing that we actually have been doing occasionally is metrics. It's a new float. Did you want to maybe just talk briefly about that?
Yeah, definitely, Andrew. No, I mean, we get asked a lot of questions about investing in bonds, and I guess as part of your asset allocation pie, and the usual cliches you hear about diversification and not all the eggs in the one basket and all of that sort of stuff. This particular fund is listing shortly and will effectively take a lot of the guesswork out, I suppose, as to getting into corporate bonds in particular. I don't know about you, Andrew, but certainly my experience is that bonds are a bit of a mystery to most people out there. They're quite, in Australia at least, they're quite heavily invested in America and certainly the UK as well. They're a much bigger portion of portfolios usually, but bonds tend to sort of, again, be a bit of a mystery here. This is a great way to, I guess, take a bit of that mystery out and effectively outsource the selection of some of these corporate bonds into a product that they can buy and sell.
So as opposed to a managed fund, and there's been tons of those, you've actually got the transparency of something listed on the ASX, which I guess appeals to us.
Yeah, absolutely. And I guess, certainly one of the big kickers for this investment will be the income that it's paying. 3.75% above the Reserve Bank rate, or 3.25? 3.25, my apologies. So 4.75 in total.
And if you think interest rates are at their bottom, that should be the low water mark for this. Plus, you know, it's got a pretty good distribution policy as well around the frequency.
Yeah, absolutely. Yeah, monthly payer, which it's pretty hard to come by. You know, something like that these days.
Aren't too many of them out there.
Yeah, for sure. And effectively, you know, for the risks, well, the associated risks with bonds, which are supposedly, you know, lesser than equities, 4.25%. 4.75% doesn't look too bad. So yeah, that's something that's on the radar, and I think particularly if you're looking for a bit more bang for your buck than
Sure.
you know, money in the bank, but still not quite, you know, I guess keen, I suppose, to jump into the ordinary shares, then this might be a good middle ground.
And, you know, without trying to prejudge anyone, for people sort of young like us, you know, you might look at it from a diversification point of view, but to me, the wheelhouse for this is self-managed super funds.
Mm-hmm.
You know, but money sitting in a term deposit, it is more risk than a term deposit. We can't be any clearer than that. But, you know, it's probably not as risky as equities, so it probably sits somewhere in the middle. So, you know, if you're lamenting the return you're getting on fixed interest, you're prepared to accept some more risk, but perhaps not the volatility that you'll have with other ASX investments. Bonds in general, and this product in particular, might be something to have a think about. So we can send you a copy of the PDS. So again, have a chat to your friendly Dornbush advisor, and they'll point you in the right direction. Michael, otherwise, as we said before, it's pretty quiet, so might go back and have a coffee and, you know, see what's happening with the cricket. I'm sure the Ashes are on soon or something, because otherwise, market-wise, it's starting to get ready for bank profit reporting season.
It is. I haven't looked at the latest Women's Day, so yeah, that might be a good opportunity.
Excellent
to catch up,
news.
for
You
sure.
can tell us what's happening with who is it? It's Camilla and Charles, and whether they're actually having the bust up and all that fascinating stuff next week.
Riveting.
Till then.